what is MFRS 8? MFRS 8, which is about operating segments. MFRS 8 requires listed entities to disclose information about their operating segments. So what is an operating segment? An operating segment is a component of an entity. First one, to engage in business activities from which earns revenue or incur expenses. Second, to be regularly reviewed by chief operating decision maker. The third one is for discrete financial information available which segments perform can be measured on its own. The main purpose of MFRS 8 is to help users like investor or analysts understand the nature of the financial effect of different parts of the business. When does MFRS 8 apply? MFRS 8 must be applied by entities that meet any of the following criteria. First, whose equity or debt security are publicly traded, which means the company's share or bond are listed on a stock exchange or in the process of issuing securities to the public. Even if not yet listed, if a company is preparing to go public, they must apply MFRS 8. Or voluntary to provide segmental information. Some companies may choose to share segment data for transparency, even if not required.
One of the central ideas in MFRS 8 is Chief of Decision Making or CODM. So, what is CODM? CODM is a function and not necessarily a person responsible for allocating resources to various operating segments and evaluate their performance. In practice, this role might be held by the CEO, the COO, and senior management team or the board of directors, depending on how the company is structured. The CODM play a strategic role for making strategic decisions about the entity's segments. Let's have a look at the example from Malaysian public listed companies. The first one is Dato' Yusof Kian as a managing director of YTL Corporation Berhad. Meanwhile, at Petronas Gas Berhad, the CODM role is held by Abdul Aziz Othman, who is managing director and CEO.
A reporting segment can be divided into two types. First is a business segment. Second is a geographical segment. A business segment is a part of a company that operates independently in terms of the product or service it offers. Each business segment often has its own management team, marketing strategy, customer base, and financial performance metrics. The key characteristic of business segment is it has a different product or service, distinct customer groups, it has a unique risk and return, and it also has a separate strategies and management. Segmenting a company by business line helps stakeholders like investor, analyst, or regulator to see which part of the business are performing well or underperforming. For example, a tech company may have a hardware, software, and cloud service as separate segments. If cloud service are growing rapidly, but a hardware service is declining, this insight can influence strategic decision or investment evaluation. For the next segment is geographical segment. A definition of geographical segment is it is a divide a company operation based on region or countries. This is especially useful for multinational companies that operate in multiple markets with different economic, political, and regulatory environment. The key characteristic of geographical segment is operation based on location. It has a different currency, regulation, and economic condition. Then, it also has a separate market dynamic and competition. Let's take a look at financial statement related to business segment for YTL Corporation Berhad. YTL operates 6 main business segments, that is construction, hotel operation, cement and building materials, management service and others, property investment and development, and utilities. Among these, the cement and building materials segment was the top revenue contributor in 2024, generating 5.39 billion in external revenue. The utility segment followed with 2.17 billion. Interestingly, the construction segment reported 1.48 billion in total revenue. Segmental reporting like this is crucial as it provides insight into how each line of business performs, helping stakeholders track financial health by product or service, identify strength and weakness, support strategic decision, and a chance overall financial analysis. For the information relating to geographical segments, YTL Corporation operation was spread across 4 key geographical areas, that is Malaysia, the United Kingdom, Singapore, and other countries. Each region played a different role in contributing to the group total revenue and non-current assets. Singapore emerged as the leading revenue contributor, generating 15.87 billion, over half of the group total revenue, highlighting its strong customer base in Asia. Malaysia, which hosts many of YTL's core operations, contribute 6.89 billion, followed by the United Kingdom at 5.44 billion. The remaining 2.3 billion came from other countries. This breakdown demonstrates YTL's strategy diversification with significant revenue concentration in Southeast Asia and substantial long-term asset investment across all regions.
2 key benefits of segmental reporting. First, understand which segment perform the best. Second, evaluating risk and global operation.
Understanding which segment perform the best. Segment reporting gives investor and stakeholder a clearer picture on how different areas of a business are performing. In this case, the data show that the utilities segment is the top performer, generating 21.2 billion in revenue. This followed by cement and building material segment, which is bring in 5.4 billion. This kind of breakdown is important because it helps user of financial statement to estimate profit and cost associated with each business line, it giving a better understanding of operation efficiency. By highlighting the performance of each segment, the company provides transparency and support better decision making for investor, analysts, and management alike.
Evaluating risk and global operation. Understanding where a company operates globally is a key evaluating its risk exposure and growth opportunity. In this case, the company generates revenue from several countries such as Singapore, Malaysia, and United Kingdom. This kind of geographic information is valuable because it helps users identify where the company is most active, giving insight into its core market. Assess the company dependence on specific country, which is crucial for evaluating potential risks related to political, economic, and regulatory changes in those regions. For example, if a large portion of revenue comes from just one country, the country may be more vulnerable to local disruption. On the other hand, a well-diversified global presence can reduce the risk and offer more stability. MFRS 134 is an interim reporting which means preparing financial statement for a period shorter than a full year, issued by Malaysia Accounting Standard Board MASB. The goal of MFRS 134 is to give user up-to-date financial information. This helps them make a better and faster decision. According to MFRS 134, interim report must include all financial statement and some explanatory note. Company also need to explain any important event or changes in the last report. One important rule is consistency. Company must use the same accounting method in both annual and interim report. This makes it easier to compare results over time. In short, MFRS 134 help improve transparency, trust and market confidence by making sure financial reports are timely, accurate and useful throughout the year.
Two significant events that occurred after the end of the last annual reporting period and how they affect the company's financial position and performance using interim financial statement as reference of YTL Corporation Berhad. The first is acquisition of Hotel Strips Kuala Lumpur. This event was completed on October 31st, 2023. Since the company financial year end on 31st December, this event falls within Q4 of 2023. So it's reported in the Q4 2023 interim financial statement. How it affect the financial statement? There is increase in investment, property RM 138 million, which held to a rental. There is also a reduction in cash of RM 138 million due to the purchase. The second event is acquisition of a hotel. This transaction was completed on April 8, 2024, which is after the 2023 annual report. It's captured in Q2 2024 interim financial statement, which is recovering April to June 2024. How it affect the financial statement? A new hotel is under property plant and equipment because of undertake the proposed renovation, but will transfer to investment property after that renovation because of held to earn rental, which is RM 55 million. The cash is also reduced by RM 55 million for the purchase. In conclusion, both events were recognized in their respective interim reports based on when they were complete. Both have a material impact on financial position and performance, so disclosure is necessary.
According to MFRS 134, financial report should include both current and comparative period. For the statement of financial position, YTL Corporation Berhad use current interim report as at 31st December 2024, while the comparative report as at 30 June 2024. For statement of profit or loss and other comprehensive income, the company use individual quarter, which is 3-month period, and cumulative quarter, which is 6-month period. For the current interim report for individual quarter include period from 1st October to 31st December 2024, while for cumulative quarter include period from 1st July to 31st December 2024. For the comparative report for individual quarter include period from 1st October to 31st December 2023, while the cumulative quarter include period from 1st July to 31st December 2023. For the statement of changes in equity, both current interim report and comparative report cover for 6-month period. For the current interim report from 1st July to 31st December 2024. Meanwhile, for comparative report from 1st July to 1st December 2023. For the statement of cash flows, both current interim report and comparative report cover for 6-month period. For the current interim report from 1st July to 31st December 2024. Meanwhile, for comparative report from 1st July to 1st December 2023. In conclusion, comparative information is important because it allows stakeholders to assess financial performance trends, identify significant changes, and evaluate the company's progress over time. This enhances transparency and provide context for interpreting current period result, leading to more informed decision making.